Good morning, traders. Happy Saturday. Hey, have been bringing you a lot of videos on trading today. I thought I'd bring you the preview of Mastering the Open Gap course, and there's no selling here, just informational and educational. And it's the trading is really when we go from integration to transformation, things starting to happen. And I talk a little bit about that in my course, what really the integration looks like and then transformation looks like. And when you really think about the word transformation, it just sounds sexy, but it's loosely used, because transformation, the form means you got to get firm, you got to get active, you got to do things right, and then you transition into what you want to do. That's how it becomes transformational. So that said, what you see in the front, the screen here is all the trades that we've taken, and this is in our chat room. So if you are in the chat room, then you know exactly what it looks like. If you're not, welcome to join. All right, let's take you to the next slide here. What I would call the playbook trading power plays. And what you see is, everybody knows the difference between what happened yesterday versus how we open. That creates a gap in prices, and there's so many different ways we can trade that, right? And it's based on the close versus the open. So very rudimentary information, but it's good to know. If this is the first time you're learning, first time you're listening to this video, then you understand the market close at 4, open at 9:30. And then when the gap happens, it creates a void. And I'm going to walk you through maybe some real life examples here on real charts for this informational video standpoint. What do I mean by that trading gap? Because that conversation and we've had in our chat room on Friday on the gap that we traded for PG. So gaps, obviously can also create overlaps in the price action. So what we have here is the gap occurs when there is a price void from a prior bar low or prior day next bar's open. So no trades happen at these prices. Now I want you to kind of think about this. Is this really true that no prices happen? Because someone brought that to me. The answer is no. Trade did happen, because it has to happen. At least one share has to trade it before the price has to go up. The answer is yes. No trade happened during market hours, because these are some things have happened after hours, the earning trades and so on and so forth. And so that's how the gaps. And then when the regular hours happen, so gaps created. An inside gap occurs when there is a void between the prior bar's close and the opening of the new bar, and the no trades at those prices. But there is no void between the bars, as you can see right over here. No trade. So, and I'll walk you through here in a minute. All right, so let's look at next slide here. And this one, I just wanted to go over and give you an overview. What are the gap types? If you're noticing my videos, my posts, they're mostly talk about professional gaps. Most everything is like a professional gap, because professional traders are trading, but we'll talk more about professional gap, because professional gap means something has to happen and there's volume that came in, and we can give many names: breakaway gap, earnings reaction gap, a post earning reaction. So we can give so many different names. But for this informational video, we'll keep it professional gap. Are gaps that have potential to change the direction of prices by gapping against the current direction. Now, let me preface that. Some of the gaps change the trends for long term to come. Remember that these are often referred as a breakaway gap. They may also occur in the direction of the long-term trend. I just talked about that, right? Novice gaps. Novice gaps, we just had one on Meta the other day that we traded. I'll show you the example. But stock is up so many days and a gap up again. That's a novice gap, because that gap means we've already moved higher, and it's almost an exhaustion point. Same thing to the downside. And like you said, and I can say right here, and maybe preceded by a wide range bar. Now, I'm going to take you through the gaps and what they look like. Quick, you have A, B, C, D, E, F, G. So right here, we have 7 different types of gaps that are happening. Now, and I'm going to just pay attention to where I have the stars right here. So that's where I really need everyone's attention, and that's going to be the important. That's going to be the most important. You have a B, A. You have a little bit of a gap here on A, and then it opens lower, closed higher. B. Now think about this. What's happening with the B gap? Because B, you have 2 green bars, and then we gap down. That's creating a shock value. C is kind of gap every day. It happens almost every day. It doesn't have to be the earnings. D, you have 3 green bars up, and we gap down under those 3 green bars, creating a significant shock value, sending a message to a bullish trader that are long in the stock that, hey, maybe you need to get out of this stock. So there is selling happening. And then E. E, I mean, we have to look at the long term, but for this example purposes, I want you to just focus on what happened in the last couple of days. Let's suppose this is an uptrend. We have a green bar, and we have a red bar that broke support. Next day, you open over the red bar. From this video, today is the 29th. I want you to remember that. On July 28th, this type of gap you can find with Roku, R-O-K-U. We traded that. I'll show you an example. And then we have an F and a G. So G is probably, I would call, a breakaway gap. So it is one of the best gaps that you can have, and that one came from recently traded with XPath. So I'll walk you through some of those right now. Now, let's take a look, what happens. Breakout bar failure. That's the breakout bar failure. That's the rest bar. You gap down. Significant move here. It's going to happen. This is, look, you are on this chart, for example. I'm going to walk you through right here. On this chart, you're breaking the downtrend. Uptrend. You're breaking the uptrend on this bar right here. Right here. All right, well, that's a little bit too far. But right here, you're breaking the uptrend right here. Uptrend line broken. And I'll walk you through. I'm going to do another video here, how to properly draw trend lines. But this stock is in a beautiful trend, right? I'm not drawing, but you understand. It broke the downtrend, broke this breakout failure, which created somewhat support right here, minor support, and boom, it just goes all day. Now, look at this one. We just talked about with the candles. This one, what happens with this one? This stock is in a nice uptrend, and this day, the world's best traders started to short the stock, and then it followed up. So it broke the uptrend, broke support, and then gap up right here into this area, bottoming tail, and never look back. This is what I would call this right here is a continuation gap. Why is that? Well, you've had wide range bar igniting the move. 1, 2, 3, 4th bar breaks this little, you can call it a little bit of a bear flag, and off we go. So these are some of these stocks, gaps, the examples that I've had. And now let me walk you through some of the real-time examples and what we have traded. All right, here we go. Let me walk you through a real-time example as I was talking about. We're going to go into Roku. And this is my screen setup, day trading screen. I traded this yesterday, and I'll show you. I've actually posted this as well. And here is the Roku trade that I posted. Right, this is one of the most beautiful pattern that you're going to find on Roku. And we just talked about this earlier on this slide right here, and we saw these things are happening. Remember, we talked about this red bar on the E, and then let's go back to this chart. Look, this stock is in a stage 2, and we can talk about a stage 2 on a weekly, but you have a red bar. It's engulfing the red bar, way over the red bar. First area is right here. You have a lot of room to move here. And then intraday, this, and I'm going to walk you through on the real-time charts right here. On intraday, you go to the 1-minute chart, and when you pull up, when you scan, and you want to have your daily, 60 minutes, weekly, but when I go scanning right here, I actually put daily, weekly, hourly. So when you do this, you have a clear picture of what's happening. This is a weekly 1, 2, 3 pattern, and I've done a video on 1, 2, 3, but I haven't posted it. I'm going to put this video. This is a weekly 1, 2, 3 pattern that triggered a very powerful pattern, and this has room all the way up to, and we're actually core long on this Roku trade. If you I'll walk you, and if you look at the post, I said I'm going to hold some overnight, which I'm holding in my other accounts overnight. This Roku on 1-minute chart, let's go right here. So 1-minute chart on Roku, this is so good. This trade was so good that you can easily trade this. You can easily trade this on 1-minute high, 1-minute low. It was that good, especially when you couple that with the pre-market chart. And I think I have a pre-market chart here for the Roku. Let me bring it here, and we'll walk you through on what happens with the pre-market chart. So that is your pre-market chart on Roku, right up here. Look, this is a pre-market chart, and what I'm trying to show you, that pre-market, I mean, it opened here, but that was a high, pre-market high at 77.50. But right here is a really nice trade, and that's where we traded Roku. As far as how we traded, we traded at 78.50, and I showed you the pre-market high. Those are really good levels to have to understand. But this is such a good shock value. You could trade it 1-minute high, 1-minute low, 76.15 by 70. Let's just call it 74.70. Give it a little bit more room. And the low of this chart was 74.88. I probably would have went to 74.75 or 74.70, but this is the area. I'm telling you that if you can learn anything from this video, when this happened, and you think you missed the move because it went from 75 to 78, and you're one of those traders, penny wise, dollar foolish, you're not gonna make money, because these stocks will not stop. It has 80% chance of winning, because here we go. You want to see it? I'll show you. I'll show you. 78.47. So that's where I traded. And let's see if I can. If you go here, if you go to my stock twits, you'll see exactly how we traded Roku. And guess what? Roku was so good, and I'll show you this Roku right here. I said Roku 80 breakout coming, and I gave long Roku 78.50, 77.50 at 6:38 a.m. Our first trade was actually PG this day, 155 by 154.50. That I can walk you through that as well. So that's how we traded. 78.50. Look, you have a bull flag on top of this range. When you have a bull flag on top of this range, you come down, it is about to pop. And it never, and remember, if you draw an uptrend line, you could have stayed in this trade up until $82. $82. And I mean, I just showed you live. Look, was in this trade. Never got out. Eventually we did. Only $400 risk, right? Only $400 risk. 78.50 by 77.50. $1,800. You could do that. You could do that with 100 shares, $100 risk, and make $400 or $500 with these type of stock. All right, I'll give you next example, and then rest. I'm getting too much into the course. But next example is PG, and I just showed you how that happened, and then I'm going to do a video on 1, 2, 3 pattern, which is one of my favorite pattern, by the way. And I look for those patterns. Two patterns are my favorite. 1, 2, 3, and a go pattern. And yes, we can talk about the go pattern another video, but for this video, we're going to keep with the gaps that I just walked you through on the candlesticks. Now this one's also, what do you find? I mean, question is, do you find similarities? So for Roku, the answer has to be yes if you haven't answered it, because you got an uptrend, you got a red bar, broke the minor support, you gap over just enough. It's not, so there's 5 criterias of gap, right? There's 5 criterias. I just did the kind of what you call it a mini lesson. There are 5 criterias of gap right here. Look at that. Shock value, clearing resistance, short term, long term, and relative strength. Look at the weekly chart. Just triggered a mini breakout on a weekly chart right here. You find similarities now. I love this so much, I called it, because this was 1, 2, 3 pattern was happening. This bar wasn't formed. Remember that. This bar had not formed when we talked about it. If I were to cover this, let's say if I were to cover this with this chart, look at this, 1, 2, 3 pattern. I want it in. I want it in at all cost. Another great trade here on PG. Same concept, same. The only thing that I like to highlight here is what you have here is a trading void. You do have a trading void. Roku is clear skies. On this one, you open here at 155, let's call it, and you have a resistance right up here at 157. More than enough for PG, because you don't have that much. PG doesn't put up that much range, or it's not volatile. But when you get an entry right here, 155 by 154.50, you could have used this, but that's too tight for me. But well, you could have used 154.50. I went all the way down. Look at, I actually gave it much bigger stop than I should have. I could have used this and load up the boat, but nonetheless, it went to 157. I just showed you where was the resistance, and that's what you got to know, how to play that. So hopefully you enjoyed it. It's a quick educational video on how to trade gaps. We'll continue to bring you more content that will help you elevate your trading and understanding of how to trade the markets. If you like it, give it a like, subscribe, put a comment, see what else you would like to do. I am happy to share, because giving back is the only way you can get back, and that is the lifetime principle. Have a great rest of the weekend.